hour, so I guess we can give a official start, whatever it
Okay.
means.
Perfect. How does it? It's conversational. You'll just ask questions and we'll go from there.
Yeah.
Perfect.
It's a little bit of both. I'm gonna be sort of the moderator. I'm the content manager here at Arcane Finance, and Max has blessed us with his presence. We've been asking him to join these episodes, and he is going to be coming in and talking a lot of tech. I mean, the technicality of things. When
You're
we
probably responsible for smart questions, and I'm responsible for stupid questions.
Let's see.
Well, yeah, to begin with it, I mean, a lot of the people that are probably going to be watching this episode later on are going to notice a few similarities with the Stablecoin Fireside episodes that you're doing. You go live with them, which is something that we're going to be striving towards. But for now, it's just going to be in a normal episode. But yeah, we took inspiration from what you actually did, and you're actually a part of the birth of this podcast episode, interview type thing that we're doing here at Arcane Finance.
Okay, great to hear. Thank you. Yeah, I think Max, you mentioned that in Miami. So yeah, thank you. I appreciate that, and it's already seeming pretty official. So good start.
Yeah, I mean that's how it hopefully will go in the future too. But yeah, for anyone that is unaware, we give you a 1-minute elevator pitch about what Range is, what you do, and how it all goes there.
Perfect. Are we already live? Just curious. Yes.
No, we're not live. We're just recording the episode, but we are going to be live in the future sometime soon.
Perfect. Cool. So yeah, essentially Range, hi, I'm Paula Pettit. I'm the VP of Strategy and Growth at Range. And Range has been around since 2022. We essentially focus on-chain intelligence, compliance, and analytics for a variety of different digital assets and stablecoins. And our premier basically products helped companies that are working with stablecoins have safer and compliant treasury monitoring and being able to send their stablecoins and being able to monitor the transactions that come in and out. So we have a whole suite, but we help give alerting, 360 alerting, real-time management, so any company can be able to see everything that's happening in both their stablecoins and their digital assets and even their fiat to help companies have a secure system.
Yeah, and that's what I kind of want to expand it on first in this first question that I was going to ask, because a lot of teams talk about stablecoins as if the main challenge is issuance or distribution. It's probably not that way now, but in practice, once stablecoins start moving across, chains, wallets, custodians, and exchanges, the hard part becomes this visibility that needs to be there. And Range seems built around that idea that if you cannot understand flows in real time, you cannot manage this treasury risk compliance or user protection at production scale. So the question would be, when you think about this production grade on-chain finance, what are the minimum capabilities a team needs before they can just honestly say that they're operating at at an institutional standard?
Mm-hmm. Yeah, so there's quite a few different things I want to say on that whole thing, but I'll answer the last portion of that question. So the minimum things that they need to be able to see is just real-time visibility into their exposure. So in the past, I think before we had kind of elevated the industry, institutional standard was essentially qualified custody and kind of audited reserves. Great, but I think where we're moving and not I think where we are moving is continuous awareness of kind of your full position. So this is your stablecoin, is it not being involved in sanctions? Is travel rule being handled? Are you having risk scoring before transactions move? So you need to be able to see where the money is. Is it in non-sanctioned wallets? Are you able to audit everything at any singular point? Are you able to show both kind of from the reserve point of view, but also from the compliance point of view to any auditors, everything that's happening? And one thing that's been really interesting, because you mentioned about the asset issuers, is we found that a lot of asset issuers, this open problem that is being solved, and we've helped solve quite a bit of it, is it's actually really hard to track where the assets go once they issue it. A lot of them are using maybe kind of a Dune dashboard, but that's a pretty superficial answer to kind of the depth and the real-time need that is needed there to see kind of, the full business intelligence, not just security, but just who's using the token as it moves across chain, and how do you see that full position? So to sum it all up, the main things that do need to have is visibility into exposure and kind of that compliance that they can show to regulation and compliance officers. But the next step is being able to get that business intelligence too, which I think is very interesting.
Yeah, this is really cool. I'm just curious. I want to pivot a little bit and ask, how do you guys decide to build in this space? Because there are some like huge companies like Chainalysis, Elliptic, TRM Labs. They are like worth of billions, some of them, I think. And I'm just curious how you decided to enter the space and basically start to compete with them.
And I wouldn't even say that we're not even planning to be kind of direct competitors in any way. We originally came out of security standpoint. Both of our co-founders came from high security backgrounds, auditors, so they feel really deeply and connected to that space. But we did start off with kind of that transaction screen, et cetera. But in the past 2 years, we actually partnered directly with Circle, and we helped them with their CCTP tracking. So USDC, as it moves through the CCTP channels across all the different bridges and everything there. And, you could say it was this strategic thought, which yes, but also a really just good spot at a good time with this partnership, because it really got us into this stablecoin side of movements, and then obviously what we've seen for the last year and a half of that growth there. So while we do have some of the basic things that Chainalysis and those have, such as the sanction screen, et cetera, we actually build much more specifically for stablecoin specific type movements, the regulations that come across with that, and then have the business intelligence on top of that, and even more of a treasury monitoring point of view, which is not something that they do. So we leave them to nail their area, and we just have a security aspect as well, but it is different.
Yeah, I think in a sense that range is here more precise and more institutional grade, like leaning towards more institutional grade side of things, because Chainalysis, TRM Labs, so they're going to be all over, but you just got this precise focus, and I think that's really cool. One of the things that I wanted to add on to that is I was looking and browsing through your website. I noticed there was a stablecoin explorer there, which is really cool. I had a lot of fun poking around that. And then there was this know your asset.
Yes.
Something that I never, saw before. Could you tell us more about that?
Definitely. So that's kind of what I alluded to a little bit with the issuers. So know your asset, know where your asset is across all the different chains. Who are the top token holders? Where is it being moved? What is the velocity of the money? Obviously, you still have that security aspect. So is it in any sanction, any kind of alerting of that sorts? But it is much more of kind of a business intelligence side. What's the DPEG risk? Where's the liquidity on the different exchanges? It kind of brings a whole 360 view for any asset issuer, whether it's stablecoin, RWA, et cetera, to be able to see everything in real time in much more depth and get the relative real time alerting for it. So yeah, I personally thought that it's a pretty cool angle, because it's a lot of the biggest issuers that you would know, they didn't even have a solution for this.
Yeah, it's interesting that the crypto is moving into the new phase where really we realize that even like these long-living companies in the space really just kind of ignored all of that, and it wasn't like mandatory for them, because there was not enough regulation, and everyone existed in this like weird gray zone where no one understands what's going on, like how things should be regulated. And now, more clarity and more need for compliance, right?
Exactly. The Clarity Act. Yep. We're moving out of the gray.
Another thing that is interesting, that you guys decided to focus initially on Solana. Is it just more or less like just happened accidentally, or was that a like well thought?
Yeah, so we actually are multi-chain. So we have EVM, we have Solana, we have the IBC networks and IBC chains, and many other kind of the major chains. But Solana was an area that I think some of the main providers had not gotten fully up to speed on. So it did leave a little bit more of a gap there than maybe some of the other chains. And that allowed kind of early partnerships directly with the Solana Foundation, with squads, and it did build out our clientele, our clients, our partnerships, our data depth that much deeper there. So it's not necessarily this intentional just Solana thing, but Solana is probably the chain where if you're on Solana and you need these compliance tools, whether it's risk, risk scoring or multi-sig or anything like that, I do think we are probably just your best solution for it. So it's just an area that kind of organically grew quite a bit, but we do service all the chains.
Yeah,
And Solana is the Walmart of blockchains. You got everything you could ever think of there.
Yeah, there are a lot of.
I haven't heard that one before.
Like the biggest probably community right now. Obviously, Ethereum has more TVL, so TVL is higher, more capital. But when it comes to retail, by like actually doing something, interacting with the chain, and this is the point when you need your compliance tools. But one thing that I'm trying to understand. So let's say there are different providers. Like some of them are very well known, like huge again, like Chainalysis and so on. Some are smaller, but also well known, like Range. But like, so let's say I'm starting a protocol on Solana, and I have a choice. So I guess with Chainalysis, it will cost me an arm and a leg to have a contract with them. They probably won't even start speaking with me. I just I looked recently at their site. They have a website, and like there is a form there that you have to submit to like contact them, and there is a filter like, do you have more than, I think, like 50,000 transactions per, I don't remember per what period of time, but so if you're below a certain scale, they don't even want to spend time like talking to you. They don't care about you. You're just immediately like filtered out. But yeah, let's say so, and I have Range, and then I have probably some other, like, let's say there are some guys who say like, okay, we are like 10 times cheaper than Range, for example. They say that, and but then I have to realize, okay, so what criteria should my provider meet? So let's say then something happens to the money, someone used stolen money with my protocol, and then I'm questioned by FBI, like, oh, okay, like, did you try to, how hard did you try to avoid this, like, money, money to enter your protocol? And then like, would it be any formal difference between you guys and some like random super cheap, I don't know, providers that just do nothing and say that everything is okay, or just do super basic checks like, oh, this wallet isn't sanctioned, then it's fine, something super basic? Is there like any like licensing, certification, like just anything that would help to distinguish legit providers from some weak ones?
Yeah, I mean, as far as certifications go, we're getting our SOC 2 certification. So that is a certification that does differentiate how data is stored, and that we are meeting certain criteria there. So I do think anyone who is looking for providers should have at least that. To your kind of, there was many things there. Definitely Chainalysis is not for the starting companies. Not only do they probably not want to talk to you, the users probably also can't afford it, which is probably why they don't want to talk to you. I've seen the prices for it, and it's good for enterprise institutions, but necessarily not for those people who are coming out of the gate. But when these startup founders or new protocols or smaller companies are coming out, there's definitely things that they should be making sure that they for certain need to be checking. Obviously, we got the super basic like sanctions, blacklists, etc. But there's also further things such as potential scams, behaviors, wallets that you're interacting with, to have they been involved in previous hacks. There's definitely an extra layer there that is might just protect your treasury or your funds more. And then just the data integrity of it. So even the basic ones, sanctions, some of these smaller, cheaper providers may not even find a super basic wallet that has been listed on a sanctioned platform. So the main things that you do need to search for is that kind of data integrity. Is it meeting those very basic needs? And what we do on our side, we check before transactions happen and before funds settle, as well as giving the forensic post something occurring. So check before a transaction is made, right when a transaction is made, get alerted as things are happening. And yeah, in the case of some form of hack, we have tools to be able to trace that. And then on the kind of pricing side, we do cater to small protocols. So yeah, we have, I'm just going to plug it real quick. We have prices for starters as low as $500 per month for our kind of smallish starter package, because brand new protocols don't come out of the gates most of the time with 50K transactions.
I was going to expand on that because, with your product line, stablecoin infrastructure now pretty much sits at the intersection of exchanges, payments, custody, treasury operations, cross-border settlement, and I think overall, stablecoins are the basis of any exchange that happens on chain. But that means reliability matters at a very different level, because if the routing layer, screening layer, or like monitor layer breaks, the issue is no longer about like product inconvenience. It becomes like a very big financial and compliance maybe event. I don't want to say that it's a big problem, but stuff happens, and I'm going to put it that way. But what makes this like stablecoin infrastructure truly production ready from your perspective, especially for smaller teams moving from experimentation into real finance operations? As you mentioned, you have this like product line for people that are just starting out, and maybe for the pros too.
Okay, so the main question is kind of what would make our infrastructure production ready, or what someone else. Yeah, so there's quite a few different things. So we have been kind of fully audited, and we have the volumes to prove it, but there's kind of main pillars that we need to be able to provide, and anyone using us would be able to have. And it's kind of this real-time monitoring aspect. So if things are moving, you want to be able to know as it's occurring, before it's occurring, not the next day, 3 days later. There's actually been some of the more infamous hacks that have occurred, like the Bybit hack, where some of our clients had multiple providers and some of the bigger names, and as the hacks were occurring, they could not get bigger names to respond in time, and it took several days to be able to even get the full attention, get the right people on it. Whereas actually our partnership with some of our enforcement, we were able to give them much quicker response times. So that does bring a different production level and kind of swiftness that maybe some of the more established, but maybe slower moving companies. And then, just also being able to have those forensic and auditable aspects. So like we're no longer in the days of kind of willy-nilly. Like we do need to be able to track everything, have the full reports to be able to send to any level of enforcement. So we're able to provide that. And we also have these different partnerships with enforcement groups around the world to be able to kind of give that full line. So there's many different aspects that might make it production ready. I don't think it's necessarily a yes nor no, like check mark, you are now, but it's all these different aspects like playing together to make kind of this whole system secure.
Yeah. Cool. I loved your example with Bybit. I think no one's insurance proof from things happening, and more than 1.5 billion dollars it was.
Super wild. I think this is the biggest hack so far, I think, in crypto. So like
I think so, yeah.
Very recent on the memory too.
Yes.
I actually wanted to touch more on the compliance side of things, because in Web3 it's like used to be framed as a separate function if you don't have it, you don't have it. If you do, then you're, I guess, the cool kid on the block. But like more teams now treat compliance as a part of the transaction design itself, because crypto is moving more into the institutional side of things, especially when they're dealing with stablecoin transfers now more than ever. And, redemptions and treasury controls are a whole different topic there. And it seems essential that if you want it to happen, it needs to happen without, losing control. I don't know if that's the best way to put it, but how should teams think about embedding this compliance directly into this transactional flow, instead of just like treating it as a manual review layer on top? As you mentioned, it's not just like a check mark, but it needs to happen for a reason.
Yeah, so you want to right out of the gates make sure that you have these compliance things, and that's what we are seeing teams do way more now. Right out of the gates, make sure that you bake it into your whole flow. And there's straight up compliance and regulations that you need to do, such as travel rules. So that's something that as it's being sent out, if it meets a certain threshold, it needs to have travel rule associated with it. But then there's other things such as the real-time monitoring. So again, you don't want to just see something after it's occurred and be like, oh, here's the forensics, it happened. You want to be able to stop the things before it settles, before it goes, before you send money to a sanctioned address. So you want that kind of 360 monitoring alert that's going in the background all the time. And with that, then you can set different limitations, such as, if it's here, send it. If it's here, mark it for human review. If it's here, block it. And you obviously can't have a human. If you have a successful protocol, you can't have a human be verifying every single one of these transactions, but you do want to be flagged in real time when someone does need to review it. So much rather review as it's happening or before it's happening than review with law enforcement days later.
But I think currently the review happens 100% off-chain. And are there any signs on-chain? So do you guys give any like attestation that like, okay, so let's say I'm running a protocol again and I claim, oh, all my transactions ran through your product, through Range. But in reality, like, how can someone validate this, right? So if I'm a user and I want to make sure that this particular protocol really uses Range, not just claims or uses it for like every other transaction, I think it would be cool to issue some attestation that can be put on chain and say like, okay, these funds like were, I don't know, like this transaction is verified by Range. I'm just, pretty random thought, but just curious.
Yeah. So, I mean, obviously we have, publicly what partners and protocols we work with. So definitely if there's a chain or a protocol that's saying that we work with them and they're not listed on our site, we maybe don't work with them. But so that part is definitely on the administrative, on the back end side, but there is something that we have been kind of exploring and kind of piloting with a couple companies as far as verifying transactions before they go for the retail users. So if they're sending a transaction, we could pre-screen it before it even goes to ensure that it's been, have you interacted with this wallet before? Is it risky? Is it sanctioned? Is it all the things I listed before, but this being kind of a retail view. So they'd be able to see from their view before it goes, yay, nay on this transaction, or a score 1 through 10, and then kind of powered by Range. So that is one way for kind of a final user to be able to get that certainty themselves.
Yeah. Well, crypto in general, is very permissionless, and it was like very, it's still a very strong offering from crypto side. So that's why I think it's, you always have to think about it, like how am I not cheated by someone as a user, as a protocol founder, as a service provider. It's just like a very natural way for this industry to operate, unfortunately. Well, of course, if you're working with Circle, you can make sure where things things are happening in a way they describe them. But yeah, some smaller protocols, and especially, well, I said good things about Solana, but I can also say some bad things about Solana. This like meme coin NFT culture.
Oh yeah, we've been there.
We're not very,
yeah. Now we as Range, we as an industry, we have sat through that.
Talking about
what?
Talking about Solana, I just 2 hours prior hosted a space with some of the biggest meme coins on Solana.
Okay.
It was Baby Doggy, Doggylon Mars, Landwolf. It was a pretty interesting discussion. But to drag it a little bit back into the serious side of things.
Have you asked them about compliance? Do they think about it?
I was thinking of I might say something obvious, but the cross-chain finance adds layers of complexity, and one is with value moving through bridges, messaging systems, wrappers, liquidity routes. This transfer can look simple to the user, but the underlying path carries settlement, counterparty, monitoring challenges, compliance, legal, anything you can imagine possibly, and it makes routing intelligence strategic function, which I guess Range does quite well around. But when funds move across chains, what do you see? I guess like the biggest risks, the biggest hidden risks maybe, and how should operators evaluate routing decisions? Just beyond cost and speed.
Yeah, it's funny. Our original version of the transaction screen and our risk API actually started specifically on cross-chain transactions, because that was actually where there was such a gap in the market and the current compliance tools, because there's so many of them were intra-chain. And then obviously bad actors would go cross-chain to be able to lose these kind of compliance rules. So then we kind of came out of the gates with our cross-chain screening, and that came before our intra-chain screening. So it was great to kind of complement, but then you could only see that portion, then we added the rest. So that used to be definitely a way that some bad actors could kind of escape. As we're moving much more to a multi-chain system, and more tools like ours are coming out that are being able to track the flow of funds as it moves through everything, it is definitely becoming less of a way that bad actors can definitely steal and get away with funds there. But yeah, there's obviously additional kind of complications and risks that come with securing and working with these bridges, such as kind of like the security of the bridge, the depth, the kind of counterparty risk as things move through these different bridges. But from a forensic point of view, that is where we put our original stake in the land and where we started. So we are able to actually track that.
It's pretty interesting.
Yeah.
Maybe Max, you want to add something to that on the side of
I think it was a great question. As we Bybit hack. So the guys, I think the hackers used Tron bridges or something like that, because obviously you can track bridges, but especially so hackers like bridges because at least it slows down the investigation process, especially if it's a not very well known bridge and that leads to some weird chain and so on. So it's a really important thing. And I have another question. So let's say the bridge goes into some private chain. So what's your take? Because obviously you can screen the funds before they enter a pool or something like that. But if you can imagine the tech stack where transfers can happen inside the pool, so the money can first be clean, but then they move between different parties and they can become spoiled. I'm just curious if you had any cases around
for that specific, I feel like I'd need to talk further to the kind of pool team there. Of course, there's an extra layer when it comes to the fully private chains, that because you have two types of private chains. You have the private chains that are encrypted but still auditable, compliant, traceable. Those we can absolutely work with. When it's the ones that are like the olden days, like completely anonymous, of course that adds quite a bit of issue to us. That's why regulation is cracking down on those type of chains. That's why they are becoming, not viable really to compliantly run anymore. So when it comes to different things like that, there's different ways that you'd have to get around it and work with enforcement partners, such as, looking at the entry exit points. That becomes a different score there. And when it comes to the fully that becomes a more complicated work with enforcement. But the private chains that are at least compliant, we can trace through those.
Mm-hmm.
Yeah. Well, I realized, we can also integrate possibly with you. So let's say we have a privacy pool that is that is compliant, so it can be tracked, but still someone has to do the actual monitoring, like live monitoring. Because now what we are doing, so you have a privacy pool, so you deposit money there, and then we can investigate. So let's say some party like tax service request or whatever, some party logistic requested the data, some authorized party requested the data to be disclosed, and the operator of this pool will be able to do that. So this solves this like post-transaction compliance part, but there is this like online monitoring part. So you don't want certain transaction to happen at all. So if you know that like, oh, this wallet was just marked as sanctioned and this wallet deposited the money into a privacy pool, then now this private money is also kind of sanctioned, right? And you don't want to allow to touch it. So it's something that just I realized is possible. So it's it's great.
So many ideas. It's definitely a space that is continuously evolving, and there's ways that used to be really easy for the hackers to get away with. We can now trace those down, but obviously they get more sophisticated, and additional routes are come out. So at the moment it's definitely a larger collaboration with different partners, such as even our partners with Zero Shadow, and to get kind of the full system there. But there is obviously still ways that they can work through, or try to at least.
I kind of wanted to discuss the topic of treasury monitoring, because real need for treasury teams is that help them respond before an issue spreads. So kind of like risk prevention, and real-time alerts, anomaly detection, exposure monitoring. It feels more closer to how a serious financial operation needs to run, as it is in TradFi mostly. And this is especially true in crypto, where markets and flows can change within minutes, and trading never stops. It's all going 24/7. So what does kind of this effective treasury monitoring look like in practice for on-chain finance teams managing stablecoins across multiple venues and chains?
Yeah, absolutely. So I'm glad you asked that, because that's definitely quite a bit of our focus, and an area that we've seen quite a bit of need in the industry. So treasury monitoring, one of the things that we are solving for is essentially the fragmentation. So fragmentation, I think, is the enemy of being able to see everything. So seeing things across chains, across wallets, across your multi-sig, and when you have to, if you're an evolved and sophisticated protocol or company, that can become quite a burden, and that's where you might lose track of things. So the things that we do for treasury monitoring is we consolidate the funds and movement across your multi-sig, your hardware wallet, your software wallet, your custodian. We'll pull in even information from your bank, so you can see everything in one consolidated spot, so you can see your whole treasury. And it doesn't matter what kind of system it's on there. And then you can set up all types of 360 alerting. So, and you can define what those alerts look like. Do you want to be alerted if a concentration moves, if certain inflows or outflows happens, if volumes change? You can put all different types of alertings on that, so you're alerted. Alerted in real time. So the idea is basically to unify everything, so you can see it from one consolidated place, and then put the different types of protections and enforcements that you need. So that's the way we're thinking about it, and we've seen it be a really big problem that has existed in the space. So we've been very excited to start solving this for teams.
Yeah, but essentially it all comes down to, this one guy, the security specialist, just sitting in front of 20 monitors and watching it all in real time.
Yeah, watching it, but also being alerted. So maybe he can also, depends how big again, and maybe if he needs, maybe there's two people. Like, obviously it scales, but they can get the alerts, so they don't have to necessarily be sitting there just watching a dashboard. Like, it is that reporting at the levels that are relevant. You also don't want to be getting a report every single 5 minutes. So it's setting those different thresholds as to what happens when something happens.
Yeah, I mean, I hope you don't take this the wrong way. What you explained is actually the best that I've ever heard. And I'm imagining
a great way. How can I take that the wrong way?
I mean, the way I put it was kind of like a meme, because you just essentially get this guy that's sitting there and he's the security.
Yes.
That's the way it goes.
Yeah, so the idea is it's not just a dashboard, it is kind of the full alerting system.
That's really nice to hear. Max, I kind of wanted to expand on risk systems, talking about how we went on to monitoring. But
I'm just really curious, and probably I can Google this information, but so how many clients do you have today? I'm just curious, how much of this Solana ecosystem you're already covering.
I don't have the exact number on me. I would say we have a decent market amount of the Solana community, but always open to chatting to anyone on the Solana ecosystem or any other ecosystem, but especially Solana ecosystem who doesn't already have that. Was that the whole question?
Really. So I just really was curious what the number, rough number is. And I'm also curious, how the perfect future for Range looks like. So do you guys envision that Range is integrated into every protocol, basically everywhere? Is it
it sounds good to me. But
AWS of stablecoin infrastructure.
Yeah, so it's not just on the protocol side, it's also kind of on more the fintech and institutional side as well. So all these different fintechs that are coming in with global payments, paying with stablecoins, you get these asset managers, hedge funds that are holding crypto assets as well. We have serviced the Web3 community for the past several years. We will keep servicing that community, but we are definitely expanding out and expanding to more traditional fintech companies that are starting to operate with digital assets and need to operate securely. So
part of the market, I think, the emerging market, and that definitely cares about compliance, because they have non-crypto, normal company part, right? Unlike some protocol that has some, we are a DAO, don't know where, no one knows where they are and so on. And they might care or not about compliance, but the guys that are launching mobile app for Latin America or some other region, they definitely have to think a lot about compliance.
Yeah, exactly. And that's why we're including kind of the banking portion on our treasury monitoring as well, because it is these more traditional companies coming as well that will obviously have normal fiat assets.
Yeah.
I hope you can't hear my cat.
No, but I wish I could.
He's really hungry. One question I wanted to add on from my previous one, kind of a follow-up. So we explored this risk systems in Web3, and they have definitely matured, as you explained. From just simple wallet screening into something grand. As you said, you can set settings and get notifications, and God knows what you can even find there. I'm not that kind of guy to even delve into that, but teams now, of course, also care about behavioral patterns, linked entities. There's AML laundering paths, drainer activity, abnormal treasury movement, and the whole Bybit hack that we discussed also kind of leans more into that. And it suggests that risk scoring is becoming more about live decisioning. So on the dot, you're right there. I think with Bybit, again, an example, Benjo did a really good job. He was live straight away on Twitter or whatever it was. He was there answering all the questions, and I think that's the kind of way to do it. But how do modern on-chain risk systems need to evolve if they want to be useful for real-time transaction decisions instead of just, like post-event analysis, like days later or maybe weeks even later, where everything is kind of just lost already?
Yeah. So it's essentially I think that is an edge on when we are talking about the risk screening specifically. That is an edge that we do have against some of these bigger companies, because they were made very much for law enforcement, or they were made very much from that forensic point of view. This happened. Let's check it out. Let's find them if we can. Whereas definitely where it's evolving and kind of that real time aspect is both as things occur, as they come in, before the transaction even happens, getting from that user point of view, that breakdown. So maybe they don't even initiate the transaction, so we don't even have to do anything on chain. So it's bringing as many of these metrics to the front of this transaction than the back of it. So it is making sure that the latency is quick, that these the second that known breaches or hacks happen, that the data is updated. Obviously, if something happens and our data is updated 5 days later, that gives way too much time for a hack to be able to happen in the between. So it's closing those feedback loops as quickly as possible. And yes, just continuing to evolve to search and scan across so many different metrics. So it's not just those basic sanction aspects. It is so we do like different behavior scores. So you can see that certain kind of scammy or spammy wallets will do multiple behaviors. They'll send tons of different transactions. They'll obviously bot-like behavior. They will send transactions that match kind of address poisoning. There's all these different known behavior patterns that wallets can do. So we screen for those on top of that. So it could say, this is a address poisoning attempt. You've never interacted with this wallet. So it's continuing to expand as hacks and schemes get more sophisticated or evolve, that all the different providers continue to evolve with that. So that's one of the things that we're doing.
My last question is, there should definitely be a part 2, because I only asked half of my questions, but for now,
that's fine. Happy to.
Do you have any kind of AI implemented into, checking these wallet behaviors, checking these like risk scoring systems? How does that work there? And how do you manage to automate it in a way that it's, readily accessible for the bigger market?
Yeah. So we have AI, like I hope everyone at this point, we have AI included into our systems in a myriad of different ways. So we do use AI to obviously come together with our risk scoring. So that's pulling in the data that we're pulling in, and pulling in data from the third parties, public dashboards, partners, etc. And that's bringing it into one system that can both give a metric. So that is just an algorithm that brings out the score, but then the AI can help give the different rationale for why that score's come out, the different things to do about it, the different things to avoid there. And then we are also looking at different AI use cases for transaction reconciliation, counterparty management, bringing everything together. So obviously, AI is really, really helpful at humanizing and understanding huge data sets, which is exactly what we have to do consistently. So we previously had our algorithms, but the AI just adds that extra kind of element on top of it.
I mean, that makes things a lot clearer for me now. As I said, we should definitely do a part 2, because
let me know when.
Pull through half of my questions. It'll be definitely more interesting to learn more about privacy and intelligence coexisting on chain. I also had a question about finance teams, operating, under a layer of monitoring, routing, and compliance and risk altogether, and what happens when that breaks, or when one of those parts breaks. But I like the fact that we focus on the positives here, and I think range is definitely up there in the list of something that I should research a lot deeper, because I feel like now I kind of maybe asked a bit of a dumb question earlier on, but
no dumb questions.
But it was definitely good hearing and you expanded on these questions so greatly. I usually had to do a few follow-ups, but the way you just managed to explain everything, thank you so much, Paula. It was a pleasure.
Yeah, thanks.
Kind of
Thanks so much.
with hosting.
Oh, yeah. Thank you, guys. Thanks, both of you, for having me. And no, that was a great set of questions and really enjoyed it. And yeah, I'm happy you gave the audience a cliffhanger, because I am more than happy to do a part 2 when we're ready.
Yeah, it kind of comes with the gig. You gotta keep them on the hook and planning for more.
Learn from Netflix. Yes, perfect.
Right.
Yeah.
Thank you, Paula. Thank you, Max. It was a pleasure talking to you both. And we'll see you guys next time. There should definitely be a next time, and we'll be discussing that. But for now, thank you so much, and enjoy.
Perfect. Awesome. Thank you guys both.
Bye-bye.